Welcome everybody to another episode of Xpandables by Fibonacci X. Let's kick off things with a quick rundown of last week's funding activity. So on the growth stage front, the hostelier raised close to $16 million from ProMath Partners and V3 Ventures. The company has scaled to around 50 hotels and over 3,000 beds with a strong occupancy across growth stage locations. The fresh capital raised by them will be basically used to expand to 100 plus properties, enhance the technology, and deepen the experiential offerings of their platform. Moving on to early stage, a total of 12 deals were closed, amounting to approximately $32 million. So, leading the segment was GobbleQ, which raised around $15 million from Susquehanna Capital, InfoEdge Ventures, and K Capital. The platform has already enabled close to 10,000 learners through the gamification curriculum, and the funds that are raised by them will be used to enhance their content library and scale partnerships with schools, universities, and strengthen their technological platform. So today's focus would be on the fintech sector, for which we have with us Mr. Manish Verma. So Manish has been a business leader with 28 plus years of experience across banking, automotive, and entrepreneurship, with an expertise in strategy, operations, and investments. So after 2 decades in the corporate world, he transitioned to entrepreneurship, and now he leads AngelBlue, which is a platform supporting startups and aspiring founders through funding, mentorship, and advisory. He also contributes to the ecosystem as a mentor with the IM Lucknow Enterprise Incubation Center, and he also serves as the chair of Startup and Entrepreneurship Forum at the PSG Chamber of Commerce and Industry. So, thank you so much, Mr. Manish Verma, for joining us today.
Thank you, Nina. I think it's a pleasure being on the platform along with you guys because I understand, and in fact, I'm aware you and the entire team led by Kulmani, Rajat, and all. I think all of you are doing a phenomenal job. So very happy to be a part of this session. So over to you.
Thank you, sir. We can start off things by talking a little about the focus sector for today's podcast. So, that would be fintech for today. So, India's fintech sector remains to be one of the most dynamic parts of the startup ecosystem and evolving beyond payments led by UPI into lending, wealth tech, and embedded finance. So, in 2026, the sector has raised close to $543 million dollars across early and growth stages, reflecting a shift from high growth funding to a more disciplined and quality focused investing. So, while keeping that in mind, so we can start off our conversation. How would you see the evolution and where is India today on the curve of the fintech evolution?
Thank you, Ninad. I think a very interesting way to start the conversation. If you go back a few years, right, when the entire fintech wave came along, as you rightly
Right,
mentioned, I think it all started with the UPI. So
right,
what did UPI bring to the table? It made your transactions and the payments very, very seamless and very convenient, right? It was very,
right,
very hassle-free. As you said, from payments, it led to a way wherein your wealth creation became easy, right? That's how all your platforms like Grow and Zerodha came up with being. I mean, they started doing well. If you look at the next wave, which was embedded finance, right? Embedded finance using one platform, financial transaction. So basically, your distribution of financial services became very, very easy, right? So right from UPI, right, which is a part of the India digital stack, to wealth creation, to lending. In fact, I missed the lending part. Once lending came into the picture, there's your platforms like Khata Book and all. They also played a very important role. So what we're saying is right from UPI, which means payments, to a level, to a stage where we're talking about lending, to wealth creation, to embedded finance. So if you look at the entire journey, I think from a stage of very, very cumbersome payment transactions to a stage where using data and automation of data, I think the distribution of financial services has become very, very seamless, has become very, very convenient, right?
right,
If you look at the statistics, I mean, you rightly mentioned, if you look at the statistics, the fintech industry today is approximately around, I think, 51 odd billion dollars, right? The forecast is in the next 5 odd years, this market is supposed to double. So right from $51 billion, it is expected to reach a level of about 109 odd billion dollars by 31, which means on average approximate CAGR of about 16% right? But today, fintech is not about only payments. It is all about sustainability. So fintech doesn't mean I create an app, I launch it to the market, and I start making payment transactions very, very seamless and comfortable. Today, fintech is all about whatever I'm doing. The financial services, so the billions of people, I mean, say India has a population of 140 crores, right? 1.4 billion. So the 1.4 billion people across metros, tier one, tier two, tier three markets, they should be able to access and avail of these financial services in a very seamless and structured manner. How will that happen? It will. So speed is no longer a very important criteria, right? Gone are the days when speed was the, people used to say speed, khicho usko, grow at any
Right.
cost. That era is over. Today, it is all about sustainability, more about compliance, more about risk management, more about proper governance. So long all these basic aspects are in place, I think fintech industry is bound to grow. Why fintech industry is growing is because it is solving real problems, right? It should
Right.
be. I mean, it is solving real financial problems of the masses, right? If you look at the statistics, 80% of the new users in the fintech market are from tier two, tier three markets. So it is no
Mhm.
longer the, so we can't say it is basically the metros or the Bangalore's and Gurgaon's and Hyderabad and Mumbai's of the world who are availing of the financial services.
Right.
Statistics show 80% of your new fintech users are from the tier two, tier three markets, which is a
Right.
big shift. So the action is gradually shifting from your tier one metro and tier one markets to tier two, tier three markets. So I think it's a very interesting space to be in. So I think
Hmm.
we'll talk about this as we go along.
Right. So, just a follow-up question. Like, as you said, how we are not yet at the, calculated valuation that we should be at in the fintech sector right now. So, how would you categorize India's position right now on the fintech adoption curve? Are we on an early stage, mid stage, or a late stage?
See, the statistics say today, as of today, which means 2026, 27, India is the third largest fintech market in the world,
Hmm.
after US and UK, right? So the very fact that today India is the third largest fintech ecosystem in the world, which goes to show the kind of robustness, the kind of strong systems, processes, and the governance that as a ecosystem we've been able to build. Coming back to
Right.
valuation, if you go back a few years, right? Historically, I think everything is more or less, I mean, whether we accept it or not, everything gets controlled by the US Fed, right? If you go
Right.
back a few years, historically, US was known for very low interest rates, wherein the average interest rates in India about 5.5, 6%, right? US was, or maybe 7 to 8%. Historically, US was always known for close to 0.25, 0.5, 1 kind of percent. When your interest rates are low, I mean the logic says when your interest rates are low, right? The cost of capital is low. When the cost of capital is low, okay, there is easy liquidity. The large scale investors and the private equity funds, they are able to raise a large corpus of funds. There is less risk involved. That entire corpus of money was getting diverted towards Asia, the markets like India, China, Indonesia of the world, right? There was a clear demand supply problem, a situation. I
Hmm.
will, so there was a clear demand supply situation. There was no more money chasing less startups. Valuations went up. So if you, especially during the COVID pandemic days, around 2021, the interest rates in US were brought down to 0.25%, right? Which led to easy call. You remember the QE, the quantitative easing days, right? So there
Right.
was excess liquidity. That money was coming towards India, China, and Indonesia and other markets. When there was excess liquidity, cost of capital was low. Investors were willing to take a punt. If you talk about India, there was excess money chasing the startups, more demand, less supply, valuations went up, right?
Hmm.
Gradually, last few years, the Fed has now increased the interest rates from 0.25 to a level of 5.5%. When the interest rates went up, the cost of capital went up. So when the cost of capital
Right.
went up, right, liquidity became an issue. That is basically what your winter funding was December winter was all about, right? So
Right.
it
Right.
was not that the money became less, investors became more cautious from a from a phase when there was the only talk was valuation and growth at any cost, the thesis shifted gradually to profitable growth, sustainable growth. If there is no profitability as of today, there has to be some path towards profitability. Unit
Right.
economics became very important. A sustainable business model became very important. I often use the example of a ventilator, right? Let's say, for
Mm.
example, if there's a patient, let's say, for example, if I am in the ICU, there's a ventilator on my nose. I am surviving just because external oxygen. Moment you take off the ventilator, right? Okay, the external supply of oxygen gets cut off, and you
Right.
know, what will happen. Similarly, all those startups and companies which were dependent only on external capital, which was coming in from the US because of low
Mm.
interest rates, because of easy liquidity, that era changed. Now that same capital started chasing sustainability, profitability, compliance, and I mean, there are a lot of examples. I don't want to take names. These startups basically shut down. So
Mm.
I think there's a clear shift from valuation to value proposition. Growth at
Right.
any cost to more of a sustainable growth.
Mm.
If there's any startup which doesn't talk about sustainability or risk management or processes or proper governance, these are all red flags.
Right.
I hope I was able to address
Yes,
your
yes.
point.
Right. As you mentioned about the funding winter which happened in December in fintech space. So despite that, at an early stage, so if we just talk about early stage funding so far in 2026, close to 70% of the fintech startups that raised money were on early stage, right? So what is there something that makes this sector essentially structurally resilient in any way, do you think?
See, I mean, this sector is all about money, right?
Right.
Money is an important part in other sectors also. But if you talk about fintech, fintech is all about bringing in technology to manage capital better. Okay. And when you talk about money, money is a very, very sensitive term. It has multiple interpretations, multiple repercussions for the masses. So different people have
Mm.
different expectations and interpretations from this word capital and money. You know. So
Right.
fintech industry being a very, very sensitive industry, I think it all boiled down to, again, as I said, growth was important, but not at the cost of governance,
Mm.
right? That is why, if I talk about Razorpay, Razorpay is a live example. They were solving a very clear problem in the market, right? Before Razorpay also as a payment gateway when they came into being, right? So before Razorpay also there were a couple of payment gateways, okay, but they were not able to address the key requirements of a MSME because it wasn't
Mm.
very easy. It wasn't very convenient to integrate a payment gateway into the other with integrate with other APIs. So Razorpay found this
Right.
problem, identified this gap in the market. They made the algorithms in a very simple manner. It was easily plug and play. They solved a big problem of the MSME market, and that's what Razorpay. So I think it is all about solving a real problem in the market, identifying what is the need, solving that real problem, and building a sustainable model around that. You know,
Right.
so
Got it.
simply burning money to get growth, to get customers, it is quite a I think big red flag and a not a win-win situation, not a win-win proposition. You know.
Right. Right. And also, would you say that there is are investors underwriting fintech differently now compared to say 3 to 4 years ago?
Yes, definitely. If you look at the concept, the word called underwriting, what does underwriting mean?
Hmm.
If as
Hmm.
a lender, right? If as a banker or if as a financial service company, as an NBFC, if I'm lending, let's say 100 rupees to somebody, okay, I need to be
Right.
very, very careful whether that person has the capacity to return the money, whether that person has a capacity to start paying principal plus interest on a day-to-day basis or regular basis,
Hmm.
okay. Using technology, that process of underwriting has gone a sea change. It is no
Okay.
longer human. The very fact AI as a technology is being used to underwrite, I think that's a big step. So in very
Hmm.
simple words, AI as a technology is helping large scale organizations to do the underwriting process in a very, very seamless and organized manner, which is
Right.
less risky because it is all data based. The human error has been totally taken care of. Okay, so technology is being used to underwrite all the financial transactions in a very, very systematic and planned manner.
Right. Got it. So if we talk about, if we look at it from a founder's lens now,
Yeah.
so from your perspective, what actually separates a truly fundable fintech startup from a startup which is, say, almost over there?
Okay, I think interesting point because this by and large is the topic for discussion in most forums where we, and since I've been doing some mentoring sessions and I've been teaching also. I think this
Right.
remains by far the most fundamental important part for any startup founder. You know, if you look at the two terms, right, almost there and fundable.
Hmm.
As an investor, if I was to evaluate a certain founder, whether this guy is fundable or not, I would try and understand what is the clarity of thought as far as the founder is concerned. Is he able to answer certain questions? For example, is he aware what problem? Is he able to articulate very clearly in simple words what problem is he solving?
Hmm.
What is the solution to that problem? Who are the competitors? What is the USP? What is the unique selling proposition? What is the USP or maybe a UVP, unique value proposition, which he's offering? Why would a customer come to him and not to the competitors? How big is the market? We look at concepts like TAM, SAM, SOM. Okay, how big is the market?
Right.
Okay, we look at how many competitors, what kind of competition is there in the market. Okay, how is the founder different from the competitor? Does he have a moat? Or is he just a me too? There are already 10 players in the market. He is the 11th player. Okay, and you try and ride the wave. Or is there a clear differentiating strategy? Okay.
Right.
What is his GTM strategy? What are his growth plan? What is his growth plan? And most important, what are the financial projections? Maybe a P&L
Hmm.
projection for the next 3 to 5 years. Whatever projections he is giving, is there a logic behind that? Is there a rationale behind that? Simply saying from 50 lakhs, I will move to a figure of 5 crores, right?
Hmm.
10x in 2 years.
Right.
And good, impressive, but how? Is there logic
Hmm.
behind that? Okay.
Right.
I'm talking about the early stage founders, right? If you talk about mid stage founders, right? Fine. A founder may not be profitable today, but what are the unit economics? At a unit economic level, I mean, is he profitable? What is the
Hmm.
path towards profitability? Is he burning cash? How aggressive is he inclined towards burning cash? Right? How much dependent is he on external capital? Okay, like I
Right.
use the example of ventilator approach, right? Is he surviving only on external capital? So the ideally the external capital should be used for growth. On a day-to-day
Right.
basis, my cash flow should be positive. If my business is cash flow positive, that cash flow positive should be able to take care of my day-to-day operations. External capital should be used only for long-term growth, right? That's a both basic. That's a basic what we all work on. But
Right.
is the external capital being used to fund my day-to-day operations, right? So to cut the story short, I think a fundable startup is all about if the founder is very, very clear in terms of what is he doing, why is he doing, how is he doing, who are the customers, who is the competition, how is it different, okay, and a robust system wherein there are guardrails, right? Okay, there is a
Right.
proper mechanism to check the financial transactions. There are proper the delegation without accountability has no meaning, right? If work has been delegated, people should be accountable for that, right? So if there is is
Right.
there a proper delegation with accountability? Okay, what kind of system checks are there, right? In terms of processes, in terms of SOPs, in terms of governance, in terms of risk mitigation strategy. So I think it is a combination effect of all those factors. I mean, we can't say it
Right.
is just we can't say it's sort of ek ya do hai. It is a combination effect of all these aspects.
Right. Right. Got it.
Yeah.
So, like another thing I think we have seen is the fintech sector is quite crowded right now, right? So, for a founder building in the sector, can execution discipline compensate for a less differentiated idea in the market?
Uh, yes and no. Because I mean, there's a lot of time when we are not doing this mentoring and consulting, and then we are not teaching, we're taking entrepreneurship courses for engineering students, right? So a lot of
Right.
times, these young founders, early founders come up to us, sir, my idea about a chair, I have a unique idea, but I don't want to disclose in public because the idea will be copied, you know.
Right.
Today, if I just use ChatGPT or any of the AI tools, Gemini or maybe Microsoft Copilot, if just give a prompt, I'll get 1,000 ideas. I'll get 1,000 ideas. So from a long-term perspective, it is not the idea, right? It is execution. Okay.
Right.
So idea used to create hype, but from a long-term execution with sustainability, that is the key, right?
Right.
So sustainability and execution become very, very important. Innovative idea, yes, is important, but only for a certain time because whether we accept it or not, in few months down the line, maybe few months or few years, that idea will be copied. You might have
Mm.
an early mover advantage, but that is only a mode for maybe a very short span of time, maybe a couple of months or maybe 1 or 2 years. Unless there is a very clear USP, which can also be copied, but in the long run, it is like कहते हैं ना कि it's a लंबी रेस का घोड़ा, right? Slow
Right.
and steady. So it is no longer about speed. It is about walking on the right track with systems, with processes, with a proper risk mitigation strategy, with proper compliance. So if any founder is able to take care of these important aspects, right? I
Right.
think he's at home. There's a
Right.
strong there's a strong possibility of him or her doing better in the long run.
Right.
Yeah.
So I think in the fintech space, another major bottleneck that founders face is the regulations bit, right? Because
Yeah.
fintech sits at the intersection of innovation and regulation. So how are startups balancing aggressive growth with governance and compliance in your perspective?
I think it's a very sensitive issue. There has to be a
Hmm.
very fine, thin line of the very fine, thin line of difference, line of difference between the two. If
Right.
you look at the evolution of any startup, for example, if I am a startup and I'm just starting, new working on a new idea, and I move from conceptualization to prototype to MVP to PMF. Yes, there is a strong tendency at my level to bypass systems, bypass processes, bypass risk mitigation strategy, bypass compliance because initial days, may I think it is all about getting your product right. I
Right.
move from basic concept to paper pen, create a prototype. I work on MVP. I go to the market, do my idea validation. I mean, if you look at the example of Zomato, these guys
Hmm.
iterated multiple times. I mean, I'm sure. I mean, you would have heard the story of Zomato. I mean, these guys started with Foodie Bay, and both the
Right.
founders,
Hmm.
right, Dupinder Goyal and Pankaj Chadha. So they came up with the concept that within a radius of 5 to 10 kilometers, which are those restaurants which are there. They created a basic platform, went to the market, did an idea validation. Customer says yes, this is good, but how do we know which restaurant offers what kind of cuisine? They came back to the
Hmm.
drawing board, did, did the tinkering and all, added menu cards. Went to the
Right.
market, did idea validation, got a feedback that what about customer testimonials? What about customer feedback? Added that also. Again, customer said, why not food delivery? So they started
Hmm.
right from conceptualization to prototype to MVP. When the feedback stopped coming, they realized there is so-called a product market fit. The concept is getting accepted by the market, and they started scaling. And there we've seen the way Zomato moved up. So to answer your
Right.
question, I think there's a very thin line of difference. Initially, I as a founder may have the tendency or the temptation to bypass systems, bypass processes because I have to get my product right. I have to make a product which is acceptable by my mass target audience, right? As I
Right.
scale, at that point of time, I have to build in the right systems. So my take
Hmm.
is systems might not be required to be focused on very aggressively at the very initial stage, but as once you reach the PMF stage, as the curve starts growing up, exponential growth, उस समय if you don't have the proper guardrails, if you don't have the proper systems in place, your vehicle can move off track.
Right.
Right?
Absolutely
So again,
true.
as I said,
Right.
a very as a founder, I need to know when to bring in the systems. After
Right.
scaling, once my foundation is wrong, and after scaling, I realized I wanted to go from Chandigarh to Delhi, but I've reached Jammu. I was moving
Hmm.
in the opposite direction, right? I was moving in the wrong direction. So थोड़ी देर के बाद, I think as a founder, the founders need to realize the systems have to be there in place, right? Maybe
Right.
if not necessary in the initial phase.
Right. So would it also be right to say that, in my perspective, like that strong compliance can actually become a competitive advantage for these fintech founders if they are able to figure out about it at an early stage compared to a later stage?
From a long-term perspective, yes, bang on, you're
Hmm.
right. From a short-term perspective, if somebody starts focusing on compliance, he or she
Right.
might lose out on the early customers. Okay.
Hmm.
But from a long-term perspective, if somebody is not focusing on compliance and regulations, I think he or she is bound to lose. So it can become a
Right.
very strong competitive advantage in the long run. Even from an so if I wear the investor hat, for me, compliance and regulation becomes more important rather than the uniqueness of the idea. Because in the long run, if there are 10 to 12 players, okay, I would take a punt on those founders who are have the clarity of thought, kya karna hai, kaise karna hai, all those typical questions which we discussed about, and also are very prone to taking decisions which are compliant with your governance and risk mitigation strategy. Yes, to answer your
Right.
point, I think it can become a very strong competitive advantage.
Right. Got it. So, so you have a long, I think it's been more than 3 years since you have started AngelBlue, and I'm sure you have interacted with hundreds of founders over the years. So, from your perspective, if you look at it from more of an investor's lens, what would be the biggest red flags today when you evaluate a fintech startup?
I think during our conversation I have addressed a couple of points, but let me
Hmm.
recap. Uh, the biggest red flag is a founder, he or she doesn't know what he or she is doing. There is no clarity
Right.
of thought.
Hmm.
Either he's just trying to be a part of the herd mentality. There are 10 players. Technology, blockchain is doing well, so I'll also be a part of that. AI is doing
Right.
well, so I'll also bring in AI and do some tinkering with my product and all I'm doing. Unless there is a clear USP, number one. If the founder credentials are not strong, right? In the sense, a lot of founders, in fact, I would say 60% plus startups fail because of founder compatibility, right? The founders are
Hmm.
not able, there's no compatibility, right? Also, when I talk about founders, if there are, let's say, for example, if there are three founders, all of them have to be having complementary skill sets. We can't have a situation where all three are from finance background, or all three are techies, or all three are operation or marketing guys. It's very important to have a balance. Maybe if one guy is a techie, other has to be a marketing guy, third has to be a finance guy. Because otherwise, who will go to the market and raise funds? Okay, number three.
Right.
Thirdly, there is no clear path towards profitability. There is a general hype in the market that startups mean funding. I launch a startup.
Right.
Within a couple of months, I go to the market. I raise funds, and I get famous on social media and all those. Okay, and that's a very immature way of, I would say, looking at startups. There has to be a clear path towards profitability. The unit economics have to be a strong focus point right from day one. Yes, initially few months, I think we have to get the customers, but burning cash excessively is a big red flag. Okay. If the market is too small, or but if the market is too small, or maybe if the market is a very, very niche market, it doesn't have a big TAM, right?
Hmm.
That's a big red flag. So I think that's it. I think that I would say these are some important. So again, to sum it up, fundamentally the most important part is clarity of thought. Does a founder have a clear vision, has a clear clarity? What are the market dynamics? Who are the competitors? How is he or she different from competition? What game is he playing? Is he playing the price game, or is he playing the premium quality game, or is there some unique technology which is embedded in, or is there better features? So there has to be something different, right? Right? Otherwise, why would a customer come to him or her? Okay. So clarity of
Okay.
thought becomes fundamentally the most important part, most important aspect which we look at.
Right. So I would also like to touch upon one point that you mentioned in the starting that fintech is seeing adoption beyond tier one cities in tier two and tier three cities as well. So for if we talk about tier two and tier three cities, segments like micro lending, agri fintech, and MSME credits are getting a lot of attention these days. Where do you
Yes.
see the most sustainable opportunity right now?
I think, as we discussed initially, the fintech market has gradually moved from with the coming in of UPI, with the plain payment transaction market to lending market to a wealth creation market to embedded finance. I think the
Right.
real future, I mean, if you talk about the future, like next couple of years down the line, I think it is
Mm,
all about the way a startup founder is able to monetize the data. There is a lot
mm,
of data available in the market. For every single thing, there is a proper data. If a founder is able to use technology in a very efficient manner
mm,
to analyze the various data points, basis that come out with a pretty strong product, okay, and have some kind of embedded finance ecosystem. Distribution of financial services becomes very important. As I said,
right.
80% of the new users in the fintech industry are from tier two, tier three markets. So it is very important that founders go look beyond the metros and tier one markets. Action has shifted quietly to the tier two, tier three, and the rural market. The
Mm,
so-called Bharat has actually
right.
become very important. There are a lot of talks going on in the boardroom, the organization, but that is a lot of it is from a optics point of view, right?
Right.
It look good to talk about Bharat, right, in boardrooms.
Mm,
But a true founder would be somebody who wants to do well from a fintech industry perspective. I think it makes a lot of sense to have a very separate, strong, separate focus towards the Bharat, which is your tier two, tier three, tier four on the rural markets. Because incomes are rising, there's a disposable income is there, thanks to internet, everybody. So today there is if there is a teenager, the aspiration value for a teenager in a rural area and the aspiration value for a teenager in a metro like Bombay or Bangalore or maybe Delhi, Gurgaon, there's not much of difference.
mm,
Because both the guys are going through the same content,
right.
right? So that the difference has now narrowed. Okay. So it is very important, I would say, for any founder from a fintech perspective to start looking at the Bharat, which is your tier three, tier four, and rural areas also. Okay. So there has to be a separate
Right.
strategy. That's what my take is.
Right. It's something to think about. You see, tier two and tier three cities are actually expanding, and I think
I mean, the
they are going
statistics
to be
show,
the
right?
TG.
Yeah,
Yeah,
I mean, statistics show that I mean, 80%
right.
of the new users in the fintech
Are in tier
industry
two.
are from tier two,
Right.
tier three. So it's no longer
Right.
the dominance of tier one markets. वो
Hmm.
एक्शन कहीं और शिफ्ट हो
Exactly.
चुका है.
Right. So I think to close our conversation, I would like to ask you one last question. That would be basis your hypotheses. Looking ahead 5 to 7 years from now, what do you think will define the next wave of fintech in India?
I think, as I said earlier, any startup, any organization, small, big, or medium or large, if they're able to use data systematically, bring in technology, and create a ecosystem wherein your masses, let's say 1.4 crore population of India, if they're able to have proper access to financial services across markets,
Hmm.
I think that is the future. So that remains a
Right.
theme. Access to financial services in a large, because fintech market is big, right? I mean, as I said earlier, $51 billion as of today, expected to double next 5 years. So by 31, it is expected to reach a figure of about 109 odd billion USD, which are with a CAGR of about 16-17%. Okay, the market is big, so there is no doubt there's a big, huge potential. It all depends what's your core USP, what product, have as much data as possible, monetize that data, bring in technology, create systems, and create an ecosystem where there are systems, processes, and compliance, which play a very important. That's my take.
Thank you so much, Mr. Verma, for joining us today.
Thank you,
I
Niraj.
hope the insight. Yeah.
I think it was a pleasure having this very heart-to-heart conversation regarding the fintech
Right.
market. I think it's an interesting space to be in. So thank you so
Hmm.
much for the opportunity. It was good fun.
Thank you for joining us, sir. And I think our viewers, be it investors or entrepreneurs, will have a lot of learnings from what we have discussed today. And for our viewers, we'll be joining you next week as well with another industry expert, and we'll be covering a different sector. So please stay tuned to our channel, and thank you for watching.